短卖公司 Muddy Waters 的历史、现在与未来。引言：短卖是一种投资策略，通过介入股票并在市场上出售，以期望在未来以更低的价格回购，从而实现盈利。Muddy Waters Research 是一家在短卖领域中颇具声望的公司，成立于2010年，专注于揭露企业的财务欺诈，尤其是在中国市场。本文将详细探讨 Muddy Waters 的历史、目前的市场状况以及其未来的发展趋势。Muddy Waters 的历史、创立与早期活动。Muddy Waters 由 Carson Block 创立，他在进入投资行业之前曾是一名律师。Block 在中国的经历使他意识到许多在美国市场上市的中国企业存在财务不当行为。2010年 Block 发布了对 Orient Paper 的负面研究报告，揭露该公司财务造假，导致其股价暴跌。这一事件奠定了 Muddy Waters 在短卖领域的重要地位。关键事件：2011年 Muddy Waters 发布针对 Sino-Forest 的报告，称其为多亿庞氏骗局。该报告揭示了 Sino-Forest 虚增资产和收入，导致其股价在短时间内暴跌 74%， 最终在2012年申请破产。2013年 Muddy Waters 发布对 NQ Mobile 的负面报告，指控其虚假客户和收入，导致该公司股价大幅下跌。2020年 Muddy Waters 对 Luckin Coffee 发布报告，揭示该公司虚报销售数据。Luckin 最终承认其首席运营官等人严重夸大了企业指标，股价应声大跌。2024年，随着市场对高估值和会计不规范的担忧加剧， Muddy Waters 及其他短卖公司开始频繁发布负面报告，反映出市场的不安与警惕。影响与成就。 Muddy Waters 通过深入的尽职调查，成功揭露了一系列企业欺诈案件。其发布的负面报告通常会导致目标公司股价显著下跌，这不仅验证了其研究的有效性，也让市场对短卖策略的合理性有了更深的认识。Muddy Waters 的成功案例包括 Sino-Forest、NQ Mobile 及 Luckin Coffee 等。这些案例不仅对投资者产生了重要影响，也引发了对市场透明度和企业责任的更广泛讨论。当前市场状况。短卖活动的复苏。进入2024年，市场对高估值企业的担忧加剧，短卖活动随之复苏。Muddy Waters、Citron Research 等知名短卖公司开始频繁发布针对多家企业的负面报告。例如 Muddy Waters 最近对 ELF Beauty 发布了短卖报告，指出该公司存在高估值和财务不规范的问题。同样，Hindenburg Research 在技术公司 Supermicrocomputer 上做出了指控，进一步反映出市场对企业财务健康状况的担忧。行业环境的变化。当前，短卖公司的活动不仅限于揭露财务欺诈，还包括对企业治理、合规性以及市场估值的广泛审视。随着投资者对透明度的要求提高，短卖公司在市场中的角色变得愈发重要。他们不仅是风险的揭示者，也是推动市场更高效运行的重要力量。未来展望。增长与挑战。随着市场不确定性的加剧和高估值的持续，短卖活动预计将继续增加。Muddy Waters 作为行业的领导者，可能会利用其在揭露财务不当行为方面的专业知识，继续在全球市场中发挥重要作用。然而，随着市场监管的加强和投资者对短卖策略的警惕，短卖公司未来可能面临更多挑战。扩展投资策略。Carson Block 及其团队可能会考虑扩展其投资策略，以适应不断变化的市场环境。例如，除了传统的短卖活动， Muddy Waters 可能会开始关注其他类型的投资机会，甚至可能涉足长期投资，以实现更广泛的收益。结论 ：Muddy Waters 的历史不仅是短卖成功的案例，更是对市场透明度和企业责任的持续追求。随着市场环境的变化，短卖活动可能会继续演变， Muddy Waters 及其同行在揭露企业欺诈、维护市场公平方面的作用将愈加重要。未来，短卖公司将面临新的挑战和机遇，但其在投资市场中的重要性将持续不变。Counterintuitive information in short-selling firms. Muddy Waters history, present, and future. 1. Short sellers as market protectors. While short selling is often viewed negatively as a strategy that profits from the failure of companies, firms like Muddy Waters position themselves as protectors of market integrity. They argue that their research and reports help to expose fraudulent activities that would otherwise mislead investors. This perspective challenges the conventional view that short sellers are merely opportunistic. 2. High valuations prompting short selling. The recent resurgence of short selling activities has been attributed to inflated stock valuations rather than simply the performance of individual companies. This suggests that short sellers may act as a counterbalance to market exuberance, which typically goes unnoticed until it is too late. The timing of increased short selling following the 2024 presidential elections indicates a strategic response to perceived market distortions rather than a knee-jerk reaction to single companies. 3. The role of media and investor behavior. The pronounced impact of short-selling reports, such as those from Muddy Waters, highlights a counterintuitive dynamic where negative news can generate a more significant market reaction than positive news. This is evident in the rapid decline of stock prices following short-seller reports, which often validate the concerns of other investors rather than being isolated incidents. The media's role in amplifying these reports can create a feedback loop that disproportionately affects target companies. 4. Misconceptions about fraud detection. There is a widespread belief that due diligence in investing primarily involves forward-looking analysis and optimistic projections. However, Muddy Waters emphasizes that much of their work hinges on uncovering existing frauds, which often involves backward-looking scrutiny of financial statements and corporate practices. This challenges the notion that investors should always focus on growth potential without considering the underlying integrity of financial reporting. 5. A risk of retaliation against short sellers. Despite their role in market correction, short sellers face significant risks, including personal threats and legal challenges. The psychological toll and potential backlash against individuals like Carson Block underscore the inherent dangers of exposing corporate fraud. This reality contradicts the perception that short selling is a low-risk strategy afforded by a strong regulatory environment. 6. The complexity of corporate fraud. The idea that corporate fraud can be easily detected through standard financial analysis is misleading. Muddy Waters' findings reveal that many fraudulent companies utilize sophisticated tactics to mislead investors, including fraud schools that train individuals on how to create fake documentation. This complexity suggests that short sellers must employ an investigative approach akin to detective work rather than relying solely on traditional financial metrics. 7. Regulatory challenges for short sellers. While one might assume that regulatory bodies would support the efforts of short sellers in exposing fraud, the reality is that short-selling activities can sometimes lead to increased scrutiny of the short sellers themselves. For instance, Muddy Waters faced investigations regarding their compliance with short-selling regulations, illustrating the paradox where efforts to uphold market integrity can inadvertently bring regulatory repercussions upon those conducting the investigations. 8. Market sentiment versus financial reality. The emotional reactions of investors to short-selling reports often overshadow the actual financial data presented. For example, the decline in stock prices following Muddy Waters reports can sometimes be disproportionate to the actual findings. This reveals a market sentiment that can react more strongly to fear than to fundamentals, highlighting a psychological bias in investing behavior. 9. The evolution of short-selling tactics. The methods employed by short sellers have evolved from straightforward financial analysis to sophisticated investigative techniques that involve extensive field research and even surveillance. This evolution suggests that the short-selling landscape is more complex and requires a diverse set of skills, moving beyond traditional financial acumen to encompass elements of journalism and detective work. 10. The interconnectedness of global markets. Muddy Waters' focus on Chinese companies demonstrates the interconnectedness of global markets, where actions in one region can have widespread implications. This interconnectedness challenges the notion of localized investment strategies, as frauds in one country can ripple through global markets, affecting investors worldwide. In conclusion, the practices of short-selling firms like Muddy Waters reveal several counterintuitive aspects of market behavior, investor psychology, and corporate governance. By understanding these dynamics, investors can gain a more nuanced perspective on the role of short sellers in maintaining market integrity and the complexities involved in detecting and addressing corporate fraud. Muddy Waters Research, a detailed examination of short-selling firms. Introduction to Muddy Waters Research. Muddy Waters Research, founded by Carson Block, is a prominent investment research firm renowned for its focus on exposing corporate fraud, particularly in the Chinese market. The firm has gained notoriety for its rigorous investigative approach and strategic short-selling, often targeting companies that exhibit signs of financial irregularities. The firm's key milestone was the publication of a damning report on Sino-Forest in 2011, which accused the company of fabricating its earnings and asset values, leading to a dramatic collapse in its stock price. Key events and methodologies. 1. Sino-Forest Incident 2011. Muddy Waters' report characterized Sino-Forest as a multi-billion-dollar Ponzi scheme, resulting in a staggering 74% drop in the company's stock price and eventual bankruptcy. This case underscored the potential repercussions of financial fraud and the critical role of due diligence in investment decisions. 2. Methodologies. Muddy Waters employs a unique approach that combines detailed due diligence with an understanding of market dynamics. The firm often focuses on reverse takeovers and small-cap companies, where transparency is lacking. Their research methodology includes meticulous analysis of SEC filings, interviews with suppliers and customers, and physical inspections of company operations. Free market impact. Each report from Muddy Waters typically results in significant stock price declines for the targeted companies, validating their research and underscoring the market's sensitivity to perceived fraud. This pattern reveals a broader market sentiment where investor confidence can be swiftly shaken by credible allegations of misconduct. Overlooked significance. Despite the attention garnered by Muddy Waters' high-profile reports, several critical aspects of their operations and impact often go unnoticed. 1. Cultural context of fraud. The firm's focus on Chinese companies highlights a systemic issue within certain markets where regulatory oversight may be less stringent. Understanding the cultural and regulatory context in which these companies operate is crucial for investors. The prevalence of fraud in these markets often reflects deeper issues within the corporate governance frameworks and ethical standards. This context warrants attention as it can inform better investment practices and regulatory reforms. 2. Evolving landscape of short selling. The resurgence of short selling activity, particularly post-2024 elections in the U.S., indicates a shifting landscape where investors are increasingly wary of overvalued stocks. This trend suggests a broader skepticism towards market valuations, driven by macroeconomic factors and corporate governance concerns. The implications of this shift could lead to more stringent scrutiny of financial statements and increased demand for transparency among public companies. 3. Psychological warfare of short selling. The strategy employed by muddy waters often involves psychological elements that can influence market perception. The fear induced by potential fraud revelations can lead to panic selling, further exacerbating stock price declines. This psychological component of short selling underscores the need for investors to remain level-headed and conduct their due diligence before reacting to market movements. 4. The role of technology. The evolution of technology has drastically changed the landscape for short sellers. The accessibility of information and the rise of social media have amplified the reach of negative reports, allowing firms like Muddy Waters to disseminate their findings more widely and rapidly. Understanding how technology influences market dynamics and investor behavior is crucial for comprehending the full impact of short-selling firms. 5. Broader implications for capital markets. The activities of Muddy Waters and similar firms serve as a check on corporate governance. By holding companies accountable for their financial practices, short sellers play a significant role in maintaining market integrity. The broader implications of this are profound, as they highlight the need for robust regulatory frameworks to protect investors and ensure fair market practices. Recent developments and future outlook. As of 2024, Muddy Waters has continued its trend of issuing reports on various companies, reflecting ongoing concerns about inflated valuations and accounting irregularities. The firm's involvement in the scrutiny of companies like Luckin Coffee and ELF Beauty illustrates its persistent relevance in the investment landscape. The future of Muddy Waters and the short-selling sector could be influenced by several factors, including 1. Regulatory changes. As scrutiny of corporate practices increases, regulatory bodies may implement reforms that could either hinder or support the activities of short sellers. Monitoring these developments will be essential for understanding the future landscape of short selling. 2. Market volatility. Ongoing economic uncertainty could lead to increased volatility in stock prices, creating both risks and opportunities for short sellers. The ability of firms like Muddy Waters to adapt to changing market conditions will be critical for their sustained success. 3. Investor education. As the complexities of financial markets evolve, the importance of educating investors about the roles of short selling and corporate transparency will grow. The lessons learned from Muddy Waters' investigations could serve as valuable case studies in investment education. 4. Global reach. While Muddy Waters has primarily focused on Chinese companies, the potential for expansion into other emerging markets presents an opportunity for the firm to uncover fraud in lesser-known territories. This could broaden the scope of their investigations and enhance their influence on global investment practices. Conclusion. Muddy Waters research stands as a pivotal player in the landscape of short selling and corporate accountability. While much of the attention tends to focus on individual reports and their immediate impacts, it is crucial to recognize the broader implications of their work for market integrity, investor behavior, and regulatory practices. The ongoing evolution of the short-selling environment, combined with the cultural and technological contexts in which these firms operate, will continue to shape the future of investment research and corporate governance. Understanding these dynamics will be essential for investors aiming to navigate the complexities of modern financial markets effectively. 1. Short selling strategy and impact on market integrity. Muddy Waters Research, founded by Carson Block, employs a rigorous short selling strategy that focuses on uncovering corporate fraud, particularly in underregulated markets like China. The firm's methodology involves extensive due diligence, often leveraging on-the-ground investigations to challenge inflated financial claims by companies. This process not only serves the firm's investment interests, but also plays a critical role in enhancing market transparency and integrity. By exposing fraudulent practices, Muddy Waters helps protect investors and serves as a check on corporate behavior, effectively contributing to healthier financial markets. 2. Significant cases and their aftermath. The reports released by Muddy Waters on companies like Sino-Forest, NQ Mobile, and Luckin Coffee have led to substantial declines in stock prices and, in some cases, bankruptcies. The 2011 report on Sino-Forest, which labeled the company as a multi-billion-dollar Ponzi scheme, resulted in an 82% drop in share price and eventually led to the company's bankruptcy. Such cases exemplify the profound impact short sellers can have on market dynamics, highlighting the potential risks associated with investing in companies with dubious financial practices. The resulting fallout often prompts regulatory scrutiny, leading to calls for greater transparency and accountability in financial reporting. 3. Current trends in short-selling activity. As of 2024, there has been a noticeable resurgence in short-selling activity, with firms like Muddy Waters and Citron Research issuing numerous reports targeting companies with high valuations and accounting irregularities. This uptick in short selling can be attributed to a combination of factors, including rising market valuations and a shift in investor sentiment following the 2024 presidential election. The increased scrutiny from short sellers not only reflects a cautious outlook among investors, but also underscores the ongoing relevance of short selling as a mechanism for identifying and addressing corporate misconduct. 4. Future of short selling and regulatory considerations. Looking ahead, the role of short sellers like Muddy Waters will likely remain crucial in an environment characterized by market volatility and high valuations. As markets evolve, these firms may need to adapt their strategies to address emerging risks and challenges. Additionally, the increasing frequency of short reports raises questions about the regulatory landscape surrounding short-selling practices. Regulators may need to strike a balance between allowing short selling as a legitimate investment strategy while ensuring that it does not lead to market manipulation or undue volatility. The future of short selling will depend on how these dynamics play out, as well as the continued commitment of firms like Muddy Waters to uphold standards of corporate governance and transparency. 1. Sino-Forest Corporation 2011. One of the most notable cases in the history of short selling and financial fraud, Muddy Waters Research published a report on Sino-Forest, a Canadian-listed Chinese company. The report alleged that Sino-Forest had inflated its assets and revenues, claiming it to be a multi-billion-dollar Ponzi scheme. Following the report's release, the company's stock plummeted by 74% and it eventually filed for bankruptcy in 2012. This case highlighted the risks associated with investing in Chinese companies listed in North America and raised questions about the integrity of auditors and regulatory oversight. 2. Enron Corporation 2001. Enron was an American energy company that became infamous for its accounting fraud. The company used complex financial structures and accounting loopholes to hide its debt and inflate profits. When analysts and short sellers began to question its financial practices, Enron's stock crashed from around $90 to less than $1 in a matter of months. The Enron scandal led to significant reforms in accounting regulations and corporate governance, including the Sarbanes-Oxley Act. This case serves as a classic example of the consequences of corporate fraud and the importance of transparency in financial reporting. 3. WorldCom 2006 WorldCom, once the second largest long-distance phone company in the U.S., was involved in a massive accounting scandal where it inflated its assets by $10 billion through improper accounting practices. The fraud was uncovered when the company was forced to file for bankruptcy, making it one of the largest bankruptcies in U.S. history at that time. Like Enron, the WorldCom scandal led to a loss of investor confidence and prompted regulatory reforms aimed at improving corporate governance and financial disclosures. This case illustrates the devastating effects of financial misrepresentation on investors and the broader economy. 未来展望，短卖公司的发展与趋势。短卖公司如 Muddy Waters 在金融市场中扮演着重要角色，其核心任务是通过揭露企业的不当行为和财务欺诈来维护市场的透明度。随着市场环境的变化以及科技的进步，未来的短卖活动可能会经历显著的变革和发展。1. 短卖活动的增加。在未来几年中，短卖活动可能会因高估值和会计不规范的担忧而继续增加。金融市场的不确定性，例如通货膨胀、利率上升和地缘政治风险，将导致更多的公司面临财务压力，这可能使短卖成为投资者规避风险的一种策略。Muddy Waters 等短卖公司可能会利用其在企业调查方面的专业知识，继续在全球范围内揭露潜在的欺诈行为。2. 技术的影响。科技发展将进一步影响短卖的方式与效率。数据分析和人工智能的进步，使得公司财务数据的分析更加高效。短卖公司能够快速识别出潜在的财务不当行为。此外，社交媒体和网络平台的兴起也将加速信息传播，使得负面报告更容易引起市场的关注，从而加速股价的下跌。3. 监管环境的变化。未来几年，全球范围内对金融市场的监管可能会更加严格，短卖活动的透明度和合法性将受到更多的审查，这将促使短卖公司更加注重合规性，确保其报告的准确性和合法性，以避免法律风险。同时，监管机构可能会要求短卖公司在发布报告之前披露更多的信息，从而增加透明度。4. 市场的反应。随着短卖报告数量的增加，市场对这些报告的反应可能会变得更加敏感。投资者可能会更加依赖短卖公司的研究，尤其是在经历了一系列企业欺诈曝光后。例如，在 Luckin Coffee 和 NQ Mobile 的案例中，市场迅速反应，导致股价大幅下跌。未来，短卖公司发布的报告可能会引发更大的市场波动，甚至影响整体市场情绪。5. 全球化的趋势。短卖活动将逐渐走向全球化。尽管 Muddy Waters 最初专注于中国市场，但今后可能会扩展到其他新兴市场和发达国家的公司。这种趋势将使得更多国家的企业受到审查，同时也为短卖公司提供了更广泛的投资机会。6. 投资策略的多样化。Muddy Waters 和其他短卖公司可能会在其投资策略上进行多样化，以应对不断变化的市场环境。这可能包括对不同类型公司的关注，例如高科技公司、初创企业以及那些具有复杂财务结构的企业。在这些领域中，短卖公司可以利用其专业知识揭示潜在风险。7. 社会责任的增强。随着社会对企业社会责任的关注增加，短卖公司可能会面临更大的舆论压力。公众对企业透明度和道德标准的期望不断提高，这使得短卖公司在发布报告时需要更加谨慎，以确保其研究不仅准确，而且符合社会的伦理标准。8. 结论。总的来说，短卖公司如 Muddy Waters 在未来的金融市场中仍将发挥重要作用。 随着市场环境、技术进步和监管变化的不断演变，短卖活动将不断发展。短卖公司需要灵活应对，更新其研究方法和投资策略，以保持其在市场中的竞争力。未来几年，短卖公司可能在维护市场透明度和保护投资者利益方面发挥更为重要的作用。